Plans to make the euro available for use as a digital currency. It says the aim is to create the safest form of digital payments.
Having a topped-up digital euro wallet on your phone or other device will be the same as having coins and banknotes in your pocket.
We do it right. We owe it to the Europeans. They need to feel safe and secure.
The European Commission published a proposal on Wednesday that would introduce digital legal tender for use within the 20-member Eurozone. The digital euro is meant to be used alongside the existing euro.
It is free for users, it is accessible, and that it ensures that citizens are protected.
These cautious institutions are now buzzing with talk of a revolutionary concept, a form of money you cannot see.
Imagine waking up one morning to find that your cash is gone. Not stolen, but simply just no longer accepted. In its place, a fully digital currency issued and controlled by the central bank, where every transaction you make is tracked, recorded, and potentially even controlled. This isn't a dystopian science fiction novel. This is the future unfolding right now. Christine Lagarde, president of the European Central Bank, has announced that the digital euro will launch by October 2025, a central bank digital currency, a CBDC, that will reshape finance, redefine privacy, and potentially shift global economic power dynamics forever. But what does this really mean? Is the digital euro a necessary step towards modernizing Europe's financial system? Or is it a tool for unprecedented financial surveillance? How will this impact personal privacy, business, and the broader economy? And why is the global race for digital currency accelerating now? Today, we're breaking down the digital euro revolution, its economic implications, privacy concerns, geopolitical ramifications, and how the public is reacting to this looming transformation. The rise of the digital euro. Why now? To understand the significance of the digital euro, we need to look at the historical shifts in currency and why central banks are rushing towards digital money. For centuries, physical money, gold, silver, and paper currency was the foundation of commerce. But with the rise of the digital economy, we've seen a gradual shift away from cash. In 2010, over 50% of transactions in Europe were still conducted with cash. By 2020, this number dropped below 30%, with digital payments rapidly increasing. And today, in countries like Sweden, cash is nearly non-existent, with only 9% of transactions still using physical money. With private sector innovations like cryptocurrencies, stablecoins, and fintech payment apps that are challenging traditional banking, governments and central banks fear losing control over money itself. God forbid. Enter the digital euro, the European Union's answer to Bitcoin, stablecoins, and China's digital yuan. Christine Lagarde and other European policymakers argue that a CBDC is essential to maintain monetary sovereignty in an era where tech giants and foreign powers could dominate digital payments. But what exactly will the digital euro do? Economic implications, reshaping finance and banking. At its core, the digital euro is being pitched as a modernized form of cash, a safe, stable digital currency issued by the ECB. Access to every European citizen even. Potential benefits for the economy, because there are some. Number one, it's faster and cheaper transactions. No intermediaries like banks or card companies charging fees. And if you've ever been charged fees, which we all have, they're shockingly high. Number two, financial inclusion. People without bank accounts could access digital money directly. This only sort of makes sense because if they don't have access to a bank account, it's less likely that they're going to be able to know how to use this. But it's on the list anyway. Number three, reduce reliance on US dollar-based payment systems, strengthening European financial independence. That sounds great, right? But here's where the concern begins. How could it hurt the economy? Number one, the death of traditional banks, which may or may not be a bad thing, depending on what replaces it. If people can hold digital euros directly with the ECB, why would they keep money in private banks? This could trigger a bank run or bank runs in times of crisis, draining liquidity from commercial banks. And number 2, and really important and really interesting, is negative interest rates. A digital euro allows the ECB to impose negative interest rates, should they choose, directly on individuals, forcing people to spend instead of saving. Number 3, programmability and expiration dates. The digital euro could be programmed to expire or restrict spending in certain categories. Let's say they don't want you to buy too much meat in that particular month, or they don't want you to drive your car and buy fuel, giving governments direct control over consumer behavior. Could your digital euro be frozen if you didn't spend it fast enough? These concerns are why critics argue that this isn't just a digital version of cash. It's an entirely new financial system with risks that most people don't yet fully understand. Number 3, privacy concerns. A tool for financial surveillance. One of the biggest concerns with a central bank digital currency is financial privacy or lack thereof. Right now, if you pay in cash, your transaction is more or less anonymous. Nobody tracks what you buy, where, or when. With the digital euro, that changes completely. Every transaction will be recorded in a digital ledger. Governments could track, analyze, and control spending in real time. Also, potentially sell your information, as they do so many other times. The ECB could freeze funds, restrict transactions, or even impose automatic fines. Why does this matter? Well, so the China example. The digital yuan and social control in China. Now, some people really like this, but you have to argue that it does have its own challenges. So China has already tested its own digital yuan. And while it has been promoted as a modern payment tool, and in some cases that's true, it's also a mechanism of financial surveillance. The Chinese government can track every payment and prevent citizens from spending money in certain areas. During protests, digital currency payments might be restricted to prevent people from traveling. In worst case scenario, digital money could be tied to a social credit system where people's behavior affects their access to financial services. The big question, though, is could Europe follow this model? Christine Lagarde insists that privacy will be protected, because what else would they say? The ECB has proposed limits on data collection, ensuring small transactions remain anonymous. However, some policymakers want full government oversight to prevent money laundering and tax evasion. Being done by who, I wonder? So the privacy debate continues. How much control should central banks have? Here's some geopolitical ramifications. There might be a global power shift. A digital euro doesn't just affect Europeans, it shifts global financial power, as Europe actually is a very large economy. It could weaken the US dollar's dominance. The US dollar is still the world's reserve currency, used in over 60% of international transactions. The digital euro could challenge the dollar's dominance by providing an alternative for global trade, as could all central bank digital currencies that are currently in development. The EU is not the only one. It could compete with China's digital yuan. China is already testing and rolling out its digital currency internationally, integrating it into global trade networks. The digital euro must keep up or risk Europe becoming dependent on foreign digital currencies. Next, a big issue that people have, and that is cybersecurity and digital warfare. A fully digital financial system creates brand new vulnerabilities. What happens if the ECB's system is hacked? Could quantum computing render digital euro transactions insecure in the future? These are challenges the ECB and European policymakers must address before launching the digital euro. Now, how are Europeans reacting? Right now, public opinion on the digital euro is mixed, but mostly they don't want it. Some people welcome it, seeing it as a modern, efficient, and safe alternative to cash. Others are deeply skeptical, fearing government control, financial surveillance, and the potential of the elimination of cash. Recent surveys show that 56% of Europeans say they don't fully understand what the digital euro will mean for them. Well, that's fair to say. 68%, so almost 70%, say they would be concerned about privacy risks for very good reasons. 42% fear it could lead to the end of cash. Many protests across Europe have already called for stronger privacy protections, demanding that cash remain an option. Christine Lagarde and the ECB have promised that cash will not disappear. Of course not. But many wonder if this is just the first step towards a complete digital financial system. So what comes next? With the digital euro launching potentially in October 2025, the clock is ticking. The key questions remain. Will the digital euro be a tool of financial freedom or control? Can Europe balance innovation with privacy and security? And how will the global financial order shift as digital currencies become the new norm? The world is watching because this isn't just about Europe. This is about the future of money itself. What do you think? Are you ready for the digital euro? Let us know in the comments, and thanks for watching.